Hello, folks. Yeah, welcome to another week where we try to analyze the charts and see if we had potential entries for the week. And if there were no entries, we just to see areas we can make improvements on. Remember, I told you guys I am on a challenge of taking my account from $100 to $100,000 within 12 months or 24 months. This may take me 1 year or 2 years, but I will surely hit the target. So I'm going to be transparent to show you all the trades I took, the losses, the wins, and some of the mistake I made. Of course, I am a human, so it's very likely that I will make mistake in the process of this journey. So get ready with me. So let's dive into the chart. Okay, so this is NAS 100. As you know, this is the favorite chart which I favorite pair which I usually trade. If I do not trade NAS, then I'm going to trade S&P 5 SPX 500 because these two pair usually move in the same direction with NAS 100. So it's either I trade NAS or I trade X and P because the two pair work hand in hand. So before we start our analysis, first we need to look at our economic calendar. The economic calendar of the week of November 17 to November 21. If you are on your forexfactory.com, I am not able to show this because I am recording live from TradingView. So if you are on your Forex calendar, you'll notice that there is no high impact news on Monday, November 17. And as a rule of thumb, I do not trade Monday because Monday I allow price or the market to do a thing. Mondays are the days where I touch grass and allow the market to print. Monday will tell you how Tuesday will be. Tuesday will tell you how Wednesday will be and the rest of the week. So looking at this Forex factory calendar, you can see that there is no high impact news on Monday. We have high impact news on Tuesday, which is unemployment claims by 3:10 a.m. We have another news 2 p.m. FOMC meeting. This happens to be a high impact news. We have another news November 20th, 8:30 average hour and the rest of the news, and we have Friday. So looking at the economic calendar, which acts as a pathway for us, looking at the economic calendar, which acts as a pathway for us, we usually use this to know our guide. I am not going to trade on Monday. I don't will not take trade on Monday, but I will on Tuesday. There is high impact news, but the reason I wouldn't have advised anyone to take trade on Tuesday is because on Wednesday, we are anticipating FOMC meeting minutes, so that is a high impact news. It is advisable not to take trade a day before a high impact news. It is only advisable to take trade after a high impact news. Why? Because you don't want to be caught up in consolidation which occurs hours or a day before the high impact news. It's better to take trade after the high impact news, which is on Wednesday. So moving over to our charts, let's prep our Monday and prep our Tuesday, waiting for the high impact news on Wednesday. So this is our charts, as you can see. So this is our charts. This is our bay chart. We are in a daily time frame. We are going to mark out our Monday. This happens to be Monday. I'm going to mark that out and rename it Monday to make our charts clean. And remember that according to our Forex Factory calendar, we are not going to trade on Tuesday because we have a high impact news on Wednesday. So we also mark out Tuesday and name the day Tuesday. Looking at Monday or looking at these charts, these bear charts, you can easily spot the high and the low. High and the low. You can spot the buy side, you can spot the sell side, you can spot this range. So market price has not moved above this range. So price is consolidating inside this range. So you mark this out as the buy side liquidity, buy side liquidity, and we also mark this out as also mark this out as sell side liquidity. Now, Monday formed inside the range, Tuesday formed inside the range. Looking at the candles of Monday and Tuesday, we can notice one thing. Monday formed with a down close candle, Tuesday formed with a down close candle. Do you recall one of our rule that when candles form, either a candle, an up close candle form 2 consecutive days or a down close candle form 2 consecutive days, it is advisable not to trade for that particular week, because what is price doing? Price is rushing to the draw on liquidity without manipulation, and you all know that manipulation is the bedrock of any entry or any trade. So it is advisable that when you see this down close candle, whether it is a down close candle, 2 consecutive down close candle on the same day, or 2 consecutive up close candle on the same day, usually occurs on Monday and Tuesday. So, but if you see these candles on the middle of the week, let's say Wednesday and Thursday, you don't have any issue. Tuesday, Wednesday, no problem. But when you see Monday open with a down close candle, Tuesday opens with a down close candle, or you see Monday open with an up close candle and Tuesday open with an up close candle, it is best to avoid trading for that week because it is a void week. We don't want to be caught up in an unnecessary situation. So, one good thing about trading the weekly profile is you can know when to stay out of the market and you can know when to participate in the market because of all these flexible rules around. So, if you were following this rule, you will not trade for the rest of the week because we have 2 down close candle. But what if you are someone that you don't pay attention to this news and you want to trade after the FOMC minutes on Wednesday? How would you have entered this trade? Let's look at what Wednesday has in store for us. This is Wednesday. We mark that out. We look for our 4 hour candle first to see what Wednesday has done. You can see that you can see what price did here. Price actually manipulated on Tuesday, and this is the manipulation. This is the manipulation on Tuesday. Let's switch to a 1 hour time frame to search for change in state of delivery or market structure shifts. And remember, we are only taking the trade after 2 p.m., which is the news. This Tuesday had a manipulation, and we are looking for change in state of delivery above the last swing point before the manipulation. This is going to be our market structure shift zone or change in state of delivery. So what happened here on Tuesday? On Tuesday on 2 p.m., 2 p.m. on Tuesday, we can see that this is 1 p.m., this is 12 p.m., 2 p.m. 2 p.m. on Tuesday, we can see that there was no much big movement. That is 2 p.m. of the news. So there was no big movement. So that is 2 p.m. There was no big movement. So it is best to avoid such trade. And already Monday was down, Tuesday was down. So it is already a void week for us. For someone who had attempted to place an entry after seeing this change in state of delivery occur here, you can see that the price only moved 1 hour. And what did it do? We saw price continue in the initial phase, which had shown on Monday and Tuesday, which is going down, which is down. Price continue the initial phase and reversed here. So these are the reasons why we most times we avoid trading as soon as we see two consecutive candles of the same range, we try to avoid trading for that week. So this is how far we've gone. But sadly, according to my human imperfection, I don't know what happened to me. So I had to I rushed into a trade and I didn't risk what I'm supposed to risk. I risked half of my capital or one third of that. I risked $8 out of the $100 which I out of the 100 and something dollar which I had in my capital. So just to rush into this trade, which means that I broke my trading rules. So I am not going to do any of this. I actually break that trading rule because I was in class to show one of my students how to trade the market's weekly profile. So currently now we are at a minus, but hopefully in the new week to come, we are going to look for potential entry. And remember, our rule is to trade like a sniper, not like a machine gunner. So in the new week, what is the in the new week? I am still going to analyze and share with you what the new week has in store for us. So continue to like, subscribe, and stay tuned as we take this account from $100 to $100,000. Stick with me. Stay safe, trade wisely, and follow the rules.